Welcome back for today's deep dive. We're cracking open the latest UK property market data. We're seeing predictions for a pretty subdued end to 2025. So, our mission for you is to really pull out the main financial reasons for this, well, stagnation, and also understand some major contradictions popping up in the property indices.
That's right. The general feeling, is, well, one source put it as all quiet on the financial and property front,
Mm.
and that quietness. It seems to be mostly about what people expect from inflation.
Inflation expectations. Okay.
Yeah, the consensus forecast.
Yeah.
Economists seem to think CPI inflation will peak around 4.0% in September 25, then maybe settling near 3.6% later in the year Q4. But that rate really needs to drop quite a bit more before the bank base rate follows enough to, properly kickstart things.
Right. Okay, let's unpack the indices then, because as you said, things look quiet. But the key fact is property prices seem to be rising slower than inflation overall. But here's where it gets confusing. Halifax's prices are actually up 0.3% month on month, a new record high apparently, $299,331. But then Nationwide says prices dipped 1.1% month on month. And Rightmove, their new seller asking prices are actually 0.1% lower than last year. So, you've got three big names. Halifax up, Nationwide down, Rightmove asking prices down year on year. How can they all be right? What explains that?
Well, this is where it gets really interesting, actually, because those national numbers, they're hiding a pretty sharp regional divide. It depends massively on what each index is tracking and where.
Okay.
So that overall dip or slower growth in annual prices, it's basically being dragged down by London and the South. They're just not performing like the rest of Great Britain.
Wait, hang on. So you're saying the whole national picture, the sluggishness, is largely a London and Southeast story?
Pretty much, yeah. If you look at places like Belfast, Glasgow, Newcastle, they're showing strong growth, up, 7% to maybe 12%. But then you look south, Brighton and Hove, Cambridge, Norwich, they're still lagging, still maybe 6% or 7% lower than back in 2022. It's really hyper-local right now. London and the South are definitely the main drag on that national average.
Yeah. Okay, so a definite north-south, or rather, London-South versus rest divide. And now layered on top of that is this immediate political uncertainty, right? The autumn budget talk. Sources are speculating about tax changes, maybe hitting homes over £500,000. Still speculation, of course, but...
But the jitters are real.
Exactly. And that potential change affects, what, almost 60% of agreed sales in London compared to just 22% outside London. Big difference.
Yeah, it is. And if you connect those jitters to what buyers are actually doing, well, it's a mixed bag. Despite all that uncertainty, the number of sales being agreed is actually up, maybe 4% to 5% year on year.
So people are still committing.
They are. It suggests there are buyers out there who genuinely need to move, but, and this is crucial, those buyers have way more choice now. Stock levels are up, maybe 10% overall, more houses on the market.
Right. More choice means more power for buyers.
Definitely. And in the South, where stock is up 9% compared to 2024, sellers are really having to price competitively. Rightmove's data shows it's taking about 5 days longer, on average, to find a buyer in those southern areas now.
Yeah.
That pressure is building.
That shift in power is key. But you mentioned buyers are still committing. There must be something helping that, despite the nerves.
There is one positive financial point. Mortgage rates. They have come down a bit. The average 2-year fixed rate, which was 5.03% back in August 2024, had fallen to 4.52% by September 2025. It's not a huge drop, but it's enough to help grease the wheels,
Yeah.
It's helping push those agreed sales through, even with all the other noise.
Okay, that makes sense. A bit of relief on borrowing costs.
So if we pull it all together, what we're seeing in the 2025 market isn't just slow. It's very sensitive to potential tax changes. It's incredibly localized with these big regional splits, and it's defined by buyers who are committed, yes, but who also have bargaining power because there's simply more property for sale.
Right. So, wrapping this up for you listening, what does it all mean? We heard that homes needing a price cut take almost 2.5 times longer to sell compared to those priced right from the get-go. If getting the price right is that crucial, and the time it takes to sell blows out for those who don't adapt. What does that really tell us about the power balance right now between sellers wanting top price and buyers demanding value? Maybe that time to sell metric. Perhaps that's the clearest sign of market pressure you can track right now. Something to think about.